Okay, let's see where we're at with all this. Right, where are we at? Have we started the live stream? Yeah, we started the live stream. Okay, 50 minutes. Let's go here, here. Let's launch this as well.
Hello, Alex. It's me again. I hope I don't bother you. I just have a really quick question. I'm just watching your backtesting strategy video, and I have a question about this. When you placed your fibs like first, this is your 0 level, and this is 100, right? And when it continued to go down and created a new lower low, you just move the 0 from here to here.
Yeah, that's it.
And I wanted to ask, is it a mistake if I move this 100 level from here to here as well?
No, not at all.
Or should I leave it right here until there's a new high that breaks this level? Or what should I do?
You could do both. Yes, good question. Let me just put that on there, get that shared. Let me just answer this guy. So yeah, you can do both. So what I generally do is if I have a 15-minute chart or an hour time frame or 1 hour time frame, I will look at both of those ranges. So looking at something a little bit closer, so moving, keeping that current range, but also then applying some fresh fibs on the new range, so the new high and low. So I can have two sets of fibs looking at both. So yeah, you can do both. I'd have both generally, not just one. Providing this is not like a 5-minute chart. If it's a 5-minute chart, I'd just look at the high and the low. But if it's like a 1 hour chart, 4 hour chart, daily chart, weekly chart, monthly chart, then I want to look at the highs and the lows. So yeah, I'd have multiple fibs. Yeah, hopefully that answers that question. Let's start YouTube. Hello, how you doing, Harmon? Good morning, 2020 TRD Camry. Remind me again, what is that all about? The TRD 2020 TRD Camry. What's all that then? Let's get rid of that. Let's pull that there. Let's go to share screen. Let's go click on advanced. Let's do that. Let's click that there. I think that's good. Let's admit people in. That would help if we could admit. Where are they? Where's that? Oh, there it is. Right, so we got to do. Way too busy in this place. Too many people. Way too busy. Too many people. There are a lot of people. So much for bubbles. We have some We have some people doing some work today. Hello, hello, hello. It's just a car you have. Excellent. Yeah, that's cool. I guess what I'm asking, is it a good car? Is it? Oh, what's going on with my phone? Why's my phone gone off? That's strange. I was going to say, if it's a fantastic car, like a Ferrari or something, you'd be like putting a photo on there, and you'd be like, there's a guy on social media. He calls himself something like Lambo something, and his name's on there as well. Harsh from India, excellent. Yeah, morning everyone. We're gonna do some top-down analysis across the market. So chuck me some things that you want to look at, and we can go and delve into them and do like a couple of minutes on each one. And just see, because today's Chinese New Year, Asian, and it's just a little bit quiet out there. I should imagine might be a bit more lively in a few hours with the US session, but yeah, just let me know what you think. What we're going to look at.
Euro yen, I would start.
Euro yen. Okay, let's have a look at euro yen. Euro yen. Let's click euro yen and change that. And then where's it gone? It's disappeared.
Because I'm currently on the short there.
Yeah, fair enough. So reload all tabs, duplicate tab. Let's get rid of that one, and let's pull it over here. Go here. So euro yen. It's just a bit chaotic in my house today. Too many people. I was going to say we have foreign workers. We have we have international workers in the house from different parts of the globe. We have Asia. We have European, Mediterranean. Yeah, it's all a bit. It's interesting.
Construction site.
Yes, could say that. It's quite funny.
If it's a construction site, usually you have a lot of poles.
Yeah, I was going to say, but no poles today. Okay, so euro yen, and then we'll have a look at pound New Zealand. Caught the good chunk of the 1 hour move already. What's that, long or short on the pound New Zealand and euro dollar? So euro yen. So we've got what are you doing with the euro yen? Start with that. What's going on with the euro yen today? Are you long or short, did you say?
I'm short right now. So
short from where? From where to where?
So I saw RSI divergence on that structure. So the structure is the
1 hour, 4 hour,
resistance.
daily?
1 hour.
Have you just gotten into
1
it
hour,
then?
4 hours. Actually both. So.
Any Scots? Yeah, you're
Yeah,
here.
Yeah, I'm just in like, I don't know, an hour ago or 2 hours, something like that.
Okay, so it's all still pushing up, isn't it? So where are you likely to put your stop? Because the high of this range is 127.50.
Let me check my stop loss.
So if you're putting your stops above 127.50 or thereabouts, potentially, unless it's completely bullish and makes a new high, that's where you would be looking, wouldn't you? But
my stop is currently at 127.2.
127.02 or 127.20?
127.20.
So 5 pips away at the moment because it's pushing up.
Yes. Yes,
Okay.
yes.
Yeah.
So I'm very close to,
Yeah.
quite close to my stop.
Okay. So look,
And
simple on here. Yeah, go on.
I'm aiming for 126, 485.
Okay. I'm just looking at it. So we've had this is a 4-hour chart. We've had a push down, we've had a new high, and then we've pulled back 38.2 in a bullish trend. So this was a pullback where everyone could have just been looking for buys. So it was a nice sell off, nice corrective sell off. Didn't really see clear divergence on the 4-hour, but maybe on a higher time frame we may have done. But yeah, still seems to be bullish overall. High time frames the same bullish. From an intraday point of view, which is 4-hour and above. Yeah, so pull back 38.2. There we go, and still bullish. So you'd need to see price action stall around this level and actually break to the downside. Don't really see anything to the downside. All euro pairs are bullish as well. Not all euro, but you have euro dollar continues to be bullish. That's just pumped up as well, and then we've just had a bullish move on pound pairs, pound dollar, pound euro. So yeah, it's bullish really. Any move to the downside is counter trend. So unless you'd employ some form of divergent strategy, like my divergent strategy. Look for divergence. Just go with the trend. The trend is your friend, and that's just uptrend still. Or be a bit more. Actually, be a bit more patient. Let it retest the high and see what it does up here. Because we have had a retest here, haven't we? We had a retest. We had a retest on Friday of the highs at around 127.34, and then it dropped nicely. It's a good 100 pip move. So that's already played out. So you're a bit late to the party on this one because this is just pumping up. This just is up, isn't it? Up and up and up.
I am.
So it's bullish until it says otherwise, and so basically it's bearish when it's bearish. So right now it's bullish. So that I can't really.
That's right.
Yeah. So that's why you just got to be a bit more patient with the setups. See what it does when it retests a high, and then take it from there. So here I can see it potentially breaking out. This is my weekly time frame. Breakout, we're targeting 132 to the upside. If it breaks out of this range. Obviously, if it fails up here, different story. This is a weekly, Euro Yen, breaking out of this area to the downside. Great, but if it breaks up, though, we could start targeting 132 to the upside. It's about 500 pip move up. So bullish, threatening to go up. But yeah, wait for it to break or fail. See what it does. It's sitting there at the minute. I'm just waiting for it to make a choice, decide what it wants to do. And I find as a tip, Euro Yen is a good one to trade. A Euro Yen is a good one to trade if it's a Yen related move. So I'll have it as an add-on. So I'll take it in addition to maybe the Pound Yen if it's a Yen move, and make Pound Yen my primary instrument, the forex pair that I'll trade. And then I'll add Euro Yen. If it's a euro related move, I trade the euro dollar, and then if I want to trade be a bit more aggressive and try and make some more money on a euro related move, then I'll add euro yen. So understand whether it's euro leading it or yen make it related move, and then trade it accordingly, because I find euro yen doesn't just move independently on its own. It's very much subject to what is going on, whether it be euro yen move. So I don't just trade it on its own. I look for correlation, if that makes sense, just as a useful tip. So what's the next one? Euro dollar. Yeah, that's a good one. That leads us to yeah, no worries. Leads us to euro dollar. So we've got entry price. I'm long on pound yen. Okay, cool. He likes the 80 number. Pound yen hasn't really done anything since, has it? Let's have a look at pound yen. Euro dollar. Let's move this one to euro dollar. So euro dollar bullish. We've had that nice little bounce off previous structure. This is a weekly time frame. So last week we did spike down to target really. My target was down at around 119.80 area. I was being conservative and it was nice. We went down to almost 50. So testing previous structure. So bullish, euro's bullish, remains bullish. If you look at the dollar index has made a decent retracement. It was like a relief rally bounce to the upside, and that came, if you recall, The dollar index came, put in a relief rally shortly after it was all announced on the news, and all these brokers and the news stations, services were all saying, "Oh, look, dollar weakness, dollar weakness," and so everyone's thinking, "Oh yeah, dollar weakness." And what did it do? It bounced and it rallied and it became dollar strength, and so then anyone trying to go long or exploit dollar weakness would have perhaps just put their money in and lost it, because it was a good exploited, manipulated. Bit of price action. Again, timing is everything. Late to the party. So now dollar weakness has resumed after a relief rally. Bit of a liquidity grab, stopping people out. You can imagine how many people got stopped out trying to go long on, say, euro dollar or pound dollar, and it needed to do a corrective pullback. So there were some short positions being taken across the board, really. New Zealand dollar, I saw, Aussie dollar, euro dollar, pound dollar. So now we're going back up. We're 50% euro dollar, testing the 50. Previous structure's been tested, still bullish. Looking for it to go up to at least 122.55, 122.50 from 119.50. That'll give a nice 300 pip move. It's already done 200 pips of that 300 pip move on euro dollar. Let's drill down and have a look in closer. Have a look at this price action. There we go. So filled that previous move up, and we're sitting at 50. Maybe expect to see something happen here. Maybe another move down. It could do something like this. Is it just going to tear on through? I think it could do something like that. Could do something like test the next fib, pull back to previous structure, and then shoot on up eventually. It could. Something like this, and then maybe even continue up to here to retest the high, but maybe expect some reaction off the 50, and bear in mind that this is a 200 pip swing already, pretty structured in terms of the move, like in terms of pips. So 123.50 down to 119.50, pretty decent, wouldn't you say? 400 pips, not a coincidence, is it? Nice. 400 pip retrace to previous structure. See that? Nice. Bullish. Is it finished to the downside? Well, it remains to be seen. We will see what happens here. Keep an eye on dollar index. Anytime anyone ever trades anything to do with the dollar, check out your dollar index. It just makes sense. Dollar index is important. Otherwise you're just trading blind. Dixie, for anyone who's not sure, Dixie. Let's have a look at the Dixie. See, look, it's correlated. So euro dollar pointing up, Dixie pointing down. This is a daily. Let's flick up to a monthly very, very quickly. See, this is the monthly range. Nice clean chart. Very bearish. We had the relief rally. A bit of a bounce up. Retraced the previous structure. Didn't quite get there, and then we've resumed. This was a monthly candle, so we could end up with a nice reversal. Monthly candle, which is why we're seeing a bullish resumption on across dollar related pairs, right? Dollar related news in 10 minutes. Yeah, thanks for that. That's true. It's 1:30 London time, so 8:30 New York time. So yeah, previous structures there. So we see how we tested at 76.4 even on the dollar index. Perfect bounce off there. Reacted perfectly. That was a good bounce. Relief rally. Off the 764, perfect, and then we've come back down to retest it, and it broke through. So applying your 764 strategy, there was money to be made there, and then shorten it back down, completely N shape, so you could have made money buying it, counter trend, 764. So know when to get in on a counter move. There's two times that you can get in on a counter move that are really, really powerful. Is at the 76.4. And it's at the 127 and 161 and 176 fib extensions, because then it's done its business to the downside. In this example, we've extended, and we'd look for divergence using the awesome oscillator. We'd look for the volume to say, okay, it's overextended. So understand, because people so many times try and catch a falling knife, try and get in at the top or the bottom of a move. You're trying to catch the tops and the bottoms, calling tops and bottoms. That's not how to trade. It's just risky. It's impatient. It's not timed. It's not You know, so allow the move to develop. Allow the move to, once it's developed, finish. Don't just guess that you think, oh, it might finish now. Allow it to do it. Allow it to finish and tell you and show you it's finished. Then get in. You know, what's the rush? So you're rushing too much. So this is why we design these 3 strategies to allow you to identify when something is in a range. So in a range being, you know, 38.2, 50%, 61.8, 764, powerful level. See, it's gone down, 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 down. It's cutting through all those other fibs. I thought about it at the 50% because we had previous structure here, but then it's cut through. This is a Dixie. This is a dollar index on a monthly time frame. But you apply the same principles to absolutely any chart, any instrument, whether you're even looking at Bitcoin, anything. All move the same. Everything moves the same. There's method to the madness. Everything is the same. Once you understand that and understand price action, you can apply it to anything and you'll just get the same movement, same price action. And then obviously there are certain variables, other things to consider, like how much it moves in a day versus, you know, gold. If you trade gold, you could easily bag 100 pips like I did yesterday in, like, you know, 20 minutes or so, as opposed to trading the Aussie dollar or New Zealand yen or something, which might give you 100 pips in a week. You know, you never know. So that's the only difference, really. It's how much volatility do you want? Those I find that are consistent are those that tend to trade things like Aussie dollar. Less stress. Doesn't move so much. You're not going to, don't have to worry about being chopped up unless there's some Aussie news. So pick your battles, really. Pick what you want to trade. Sometimes volatility isn't good. People get so caught up in things like trading gold and it just chops them up because they're trying to trade with a 20 pip stop. You can't trade with a 20 pip stop on gold, but you can trade with a 20 pip stop on things like the Aussie dollar. So sometimes you can't apply the same rules, the same principles. And that's a mistake. Again, what I'm saying makes sense, right? And you're probably sitting there going, yeah, I know that. So why don't you do it? And it's just common sense. So a lot of trading is about common sense. I just think people forget themselves. They lose themselves. And common sense goes out the window when it comes to trading. You've got the most probably normal, everyday kind of people, sane in your everyday life. You do things normally, no drama. Come to trading, where does your common sense go? You leave it at the door, don't you? You just get mesmerised by price action. You're just looking at it. It's like all this recent news with Bitcoin. Let's try and trade Bitcoin. Why? You don't trade Bitcoin. Are you going to be able to handle a 1,000 pip swing? No. Well, what are you doing with your crypto? Oh, I've got a 20 pip stop on it. Oh, well, good luck. The spread's 50. The spread's 100. It's just stuff that it does my head in sometimes. It's just what people do. There's no sanity. There's no common sense out the window. But anyway, there you go. So don't forget common sense. You need a bit of common sense. If you haven't got any, God help you. You should be trading. Anyway, so yeah, there we go. It's a previous structure. There you go. Look at dollar index whenever you're trading anything dollar related. It's bearish on a monthly, but of course we are only 11 days into this month, so anything can happen. We've had that bullish relief rally, which I was looking for, and that made sense because over the last few weeks, again, the news, all the media was hyping it up, saying, oh, look, dollar weakness. Everyone thought, let's jump in on dollar-related pairs. And what did they do? They took it up, manipulated against you because they see all this volume pouring in, and they pushed it against you. Liquidity grabbing, stopping everyone out who's trying to get in late to this party, trying to short it down here. Look where it's come from. Hello, what are you doing? Just wait for the pullback and then short it. Pull back, short. Pull back at key levels, short. Take it there, T1, retest of the low. New low, great. Pull back, short. Just simple price action. That's MT strategy. So learn the strategies. They cater, should I say. They accommodate every eventuality, cover pretty much every sort of price action. You learn my 3 strategies. You can't go too far wrong, really. Just know which one to apply when, and often you can apply all 3 and create, or even 2 together, which creates a sort of a hybrid strategy, which is encompassing the rules from 2 or 3 of the strategies, and you put them together, a bit like a Power Ranger. My son was asking me about Power Rangers, from years ago. Anyway. Right, what was the next one? Let's have a look. Pound New Zealand. Let's have a look at Pound New Zealand.
May I ask a question about the Awesome Oscillator, actually?
Yeah, go for it.
What does it actually measure? Because that's something
Volume.
I
It's
didn't
it's a
understand quite correctly.
it's a volume indicator. Let me give you an example of a volume indicator. So you know sometimes people have order flow and let's have a look at majors. I'm going to show you something here quickly. I'm going to show you the pound. Somebody was sharing this in. Oh, here we go. Volume. So let's pull it. Has he got any of it in his charts? I can't see it on his chart. He's got it on the side. Sometimes you'll see things like. I don't know. You'll see things like that, where you know on the right hand side you've got the order flow and you've got the volume on the right. This stuff here,
Yep.
and you sometimes have it horizontally on the actual chart itself, and so it's a way of looking at volume.
Yep.
So you can have it horizontally, vertically on your chart. I can't even get this off. Oh, here we go. Or here, or you can just have it at the bottom. I'm going to just have it at the bottom because I don't want it on my charts. Keep it clean. So what are you doing with your pound New Zealand? Does that answer that question? It's volume. It just shows you volume. So when volume deteriorates and goes down, but price is still pushing up, that's when you see divergence. What does divergence mean? Well, okay, price is still being pushed up. There's still buyers pushing the market up. But the amount of buyers and the amount of money that's pouring in to pump the price up is actually going down. It's getting less and less and less. So maybe there are less players, or maybe people have taken their profit. And so you're starting to see divergence. So it's powerful on a higher time frame, because on a 4-hour, daily, or weekly, if you're seeing that divergence, then yeah, it gives you a chance to sort of say, okay, I don't want to jump in on this because this looks like it's going to go down now. So I'm not going to take longs up here. I think we might see some exhaustion. We might be due for some sort of correction. So in terms of anyone trying to get in, calling tops and bottoms, that helps you because you can see now's the right time to go short. It's not quite ready to go short yet because it's bullish, but this is good. This is pound New Zealand. What are you doing, pound New Zealand? Caught the good chunk of that move on pound New Zealand. Did you go short? My stop is 127.50. Oh, you're short on euro yen as well. Okay, 127.50 euro yen. Okay, yeah. See what happens there. Again, just would be buying up to 127.50 to be fair, or at least allow it to test 127.50 on euro yen and then short it from there. And you know what that's about? That's fear of missing out. FOMO. So you want to get in early because you feel like it's going to drop before that. But what you should say to yourself is, I'll be patient. If it doesn't get to 127.50, I don't short it. If it doesn't get up to close to 127.50, I don't short it. So you miss out. And what? Wait for the next one. The setup wasn't perfect. So don't just take half-assed, rushed trades just because you feel like this one. So you've got a short on pound New Zealand. This is a 4-hour chart. Look at this. This is a nice. Where did you get in short on here? Because this is nice. Triple top. Really nice, right? Really, really nice. Getting short up here. This has been allowed to play out. Nice. Look at all the pound pairs. You've got pound Aussie, pound New Zealand, euro Aussie, euro New Zealand. They often move in sync, and they're moving in the opposite direction to pound yen, pound CAD, pound dollar. Euro yen, euro CAD, euro. They're all bullish, and these pairs are somewhat bearish. If I drill up to a monthly, you can see they're bearish. You know, really down, but they're trying to build in some momentum here and trying to get up. This is pound New Zealand. For me, it's all a bit sideways, and I don't like it. If I take the last major swing high, last major swing low, that's monthly. We had this massive spike up, and this is March when we had the pandemic. So it wicked up, but closed the next month, closed perfectly, bouncing off the 50. So that's quite nice, and so it's been bearish ever since. Then if we go down, so top-down analysis, always do top-down so you know what's going on. So bearish on the monthly, but we've been consolidating and finding some support. If you look on the weekly, so it could explode to the upside, but at the moment it's just sideways for the last 4 weeks. Range bound, so you're right to short off there. Rejection, triple top, testing it maybe a 4th time. Drill down again, look at it in a little bit more detail. What's your target? What's entry on pound New Zealand? What's target and entry? And where's your stop? So you can see that in a little bit more detail. So we started from the monthly, drilled down to the weekly, drilled down to the daily. Look at that triple top, nice. You can short from here. Great. Today, come in, short it, wonderful. Rejected off a key area of resistance. Don't need any fibs or anything to see that. It's just pure price action. It's powerful. The more times an area gets tested, the more powerful it becomes. It's a bit like a kickboxer. You know when you're kicking or punching even. You're kicking and you're punching. You're strengthening up your bones and you're making it harder and firmer. So the more you hit it, the stronger it becomes. And this is the same thing here, same principle, like resistance and support being tested multiple times. As a rule of thumb, I look for 2 tests because then it becomes relevant. Well, if it's just tested once, you haven't got any data, have you? You've got nothing to go by. So same with the trend line. You know, when you apply a trend line, you can only do it with 2 points of contact as a minimum, right? So 2 points of contact. So then you look for the third retest, which then becomes relevant. So if this was to come all the way down here, or starts coming down here, breaking down, I'd look to short it and hold to the trend line at least. Then the trend line acts as a secondary confluence for me. First and foremost has to always be my fibs. So I'll put some fibs on here, and I could say, okay, depending on what time frame we're looking at, we could maybe use that last swing low here and the last high, because that high is higher than these last ones. And look at this, so we're at 38.2 right now. We could then apply some more trend lines and look at the more relevant price action, which is here. You can see that. But maybe do it on a smaller time frame. You can see it's coming down a test there. So if it breaks there, we'd look for 176.4 to the downside, which is 189.50. Nice round number. Good target to the downside. Also consider 190, $1.90. Solid institutional level. Nice round number again. You've got some previous structure there. Also 61.8 round number. So a couple of decent targets. That's 100 pips away. Needs to break here though. Otherwise it's just support. Holding. Previous structure. Drill down a little bit more detail and see it happening a bit more, you know, there. Let's just polish this up a little bit. Let's put some trend lines on. See, it matters, doesn't it? When you start putting your support and resistance on your charts, understanding support and resistance comes in many forms. First and foremost, having back-tested all these different types of support and resistance, the most powerful and the most precise, because it is so precise, are my fibs. Fibs are the most powerful and accurate and precise for me in terms of support and resistance, because they're just lines, very thin lines, one level. You know, where you have like order blocks, and you see people doing things like these order blocks, these supply and demand zones. An order block is a zone. So, you know, you're looking at previous structure and you do something like this with a zone. And, you know, how big do you make that zone is always the trouble. It's always problematic for me. Like, how big do I make this box? And where's it going to stop? It's all very well coming into this box, but where's it actually going to stop? And how big do I make that? So, again, secondary. Order blocks, secondary. Trend lines, secondary. First and foremost, fib. It's one line, one number, one level. It will bounce around this area. Then we apply trend lines. We apply some previous structure, support and resistance, supply and demand zones, those order blocks, whatever you want to call them, as a bolt-on, as an added confluence, because you want a few reasons to understand getting in and getting out. That's a good target. This is a 4-hour chart, 4-hour time frame. See if it can break through. It's all very well trying to break through at the moment, but it hasn't closed yet. Now, if this springs back up and closes back above that trend line, for me, that's done to the downside. All it did was it wicked down, it tested, tried to break through, but the body of the candle has to close, not like this, but it needs to close like, you know, it needs to close like that. For me, it needs to close, properly close. The body's actually pierced through. The whole candle's pierced through with some confidence, with some real enthusiasm, you know, not just some weak little test just to suck in the sellers down here, and then it closes above and leaves a little wick. All that's telling you is that it attempted to go short, didn't quite get there. So let's wait for the next candle. Again, which time frame you're on will determine how long. So we've got 8 minutes. Let's see where we're at. Do we have any scalping strategy in a 1 minute? Forget that. That's dead. Guys, not sustainable. You're not going to make any money scalping. you might make money for a little while, but it's not sustainable. It's just not. And basically, you're gambling, trading the news. But you're looking for a little bit of an impulsive move, guess a direction, and try not to get chopped up with a bit of news that's just going to take you up a bit, down a bit, sideways a bit, left a bit. And every time you try and get in, it goes the other way. You scalp 2-3 times, and you end up with massive losses. It's not trading. It's gambling. There's no skill involved in that, really, or a different kind of skill. So yeah, news events. But anyway, hopefully that explains a little bit about price action, how we look at things, how you can apply your support and resistance, and just really how I think and how I view my charts. And it's quite straightforward. You've got a couple of things that you use. You can add some EMAs as well, exponential moving averages. So these ones, I use an 8, a 21, a 50 and a 200. Let's apply them to the chart. Whoa, they're all over the shop. Let's have a look at the big one. What's the big one? Is that a 200 or 50? That's a 21 EMA. That's a good one. Then we've got a 50 and a 200. So you might get a bit of a bounce of the 21, trend line, and a 38.2 at around 198.7. So yeah, I think see what happens with this candle. It might all just close here, and then the next candle might see it suddenly be brought back up again, especially if there's no real volume to see price push down. But if it can close below and start breaking through all of this support, then start targeting, a decent drop. Next fib, 190.43. Now if you want to take this further, put some fibs here on this last range. Watch this. This is probably 764. Look for 764 down here at this 50. So this is called fib clustering. So fib clusters, where you overlap different ranges. Someone just asked me about this before. I think is he here today? Nicola. Yeah, Nicola. Yeah, you're here, aren't you? You asked me about this. So you were saying about the highs and the lows. Where do you put your fibs? Well, you can put fib clusters. You can put multiple fibs. So straight away, I know there's this roughly about 76.4 without even applying these fibs. It's about 3/4 of the way down, right? That's it. Think of it as that. 3/4 of the way down. Again, if it makes a higher low, this would make for a good downside target. 190.50 area. Round it up, 190.50, about 50% retrace of this range. Still in keeping with a bullish trend. Making a higher low if it got down there. So it would make a good downside target. First it has to break where it's at now. This is, if I was shorting this and I'd shorted it, this is my T1. T1, no brainer, I've just shown you why. T1 here. If it can try and break through here, which it's trying to do at the moment, but it's still here, still got the support. If it can break this, T2 would be somewhere like, I don't know, down here somewhere to a 764 of this range. Then obviously if it breaks on down there and it makes it an N shape, then potentially we're getting a change of trend. Then we could start really saying this is no longer counter trend to the upside. This is a resumption of the downtrend. And again, when you draw up to a weekly and a monthly, what did we identify? We identified we're still very much in a bearish downtrend overall. So it wouldn't. Yeah, there you go. So yeah, it's very subjective. And it depends how aggressive you want to be and how much profit you want. Me, I risk 0.5%, make 1%, so 2 to 1. I'd be happy with that. If you bag 1% a day and your hit rate's pretty decent, 70% hit rate, 80% hit rate, imagine how many days are there in a year? 365. If you bagged 1% a day, roughly over a period of 300 days, and you made like 2 or 3, 300% plus profit in a year, would you not be happy with that? So think of it as that. In that way, some people try and milk a move too much. All this like, I've got a 1 to 10 R&R and all that, and it's like, well, you're forcing it sometimes. You couldn't short it here for a 1 to 10 unless it broke, and then you could maybe target down here. So just bear it in mind, how much money do you need to make? If you've got 100k or 200k or 300k, making 0.5% a day, 1% a day, and you're doing that consistently over a year, 300 plus days of profit, you've doubled, more than doubled, you've tripled your accounts. Power of compounding. Small steps. Think about it. That's why we set a 5-year plan. By year 5, you're trading with millions because you've done it the right way, slow and steady. Is it possible? Yeah. Do people do it? Of course they do. It just takes a bit of thinking, a bit of common sense, a bit of patience. Stop living in a world where everything's instant gratification. You can't apply those rules in trading. You won't win. You force it, you'll lose. It's not going to happen. Dreaming, it's a skill. You have to learn a skill. You want to learn to play an instrument like the piano. You think you're just going to pick it up and then by next week you're going to be able to just be masterful at it. Yeah, you can copy some music sheets. So you can come in here to trading and copy what I'm talking about and apply some of it. But you're going to be really shit at it and really good at it and be able to do it off by heart without looking, and not necessarily. It just takes time. It's a skill. So accept that. Resign yourself to that thinking, and be patient and say, all right, I'm going to give myself 3 years, 4 years, 5 years. I'm going to get really good at this. So yeah, just tweaking what works for you. So for me, I gave multiple options in terms of pound New Zealand. Where's the targets? What could be happening. For me, T1's here. For you, your T1 might be a bit more aggressive. You might be looking at down here, looking at that last, looking for a 764 retracement of this last bit of range here, or you might be looking for the 764 down here. Certainly, I could come in every day and just pick at it, and so short here, bag some money, I'm done. If it breaks, I'll have another go. Short it down to here, next target, I'm done. Next target, I'll have another go. This could feed me for a week, this price action, potentially. I could hold a position, a small position, keep a bit of skin in the game, 0.25%. Or I could come in every day, and if this was still sitting here tomorrow, have another crack at it, short it down to here, and then another crack, 2-3 days, make 3, 4, 5% on just this one pair. This is why we say pick 1 or 2 pairs. Don't be greedy. Learn it. Learn how it moves. Understand it. Trade it. Milk it. 2-3 days. You're done. Take the rest of the week off. You've made 3-4%. All right, you're good. Come back next week. Have another go. Learn work-life balance. Go and enjoy yourself. I know we're in lockdown, so you just end up sitting here looking at charts all day, all week, all month, and that's really unhealthy, unproductive. Spend 80% learning. So anyway, that's it. I've run out of time. I'm not going to do any more. I'm going to keep it short and sweet today. So hopefully you found that very constructive. Any questions, let me know. But we've got about a minute left before this all finishes. So sorry about running out of time. Any other questions? Final questions?
Thank you, Dan.
Final thoughts? Anything? No?
It was super informative as always.
Yeah, no worries. So AU, long bias. Yeah, well, that the long bias on AU because it's dollar related. So look at the dollar index. Like I say, any dollar related pairs, look at the dollar index. If that's bearish, you go bullish with those other pairs. Simple as. Look at what these. So basically, look for pound dollar and euro dollar for inspiration for what you're trading. And obviously Aussie dollar's nice. Amazing interactive session. Yeah, let's keep it short and sweet. I want to work on a psychology podcast that I've got. I really want to put content there because that's where you need to work on. It's not your trading. Trading's 20%. 8% is yourself. You are your own worst enemy. You've got to sort yourself out, sort your brain out, apply common sense. You'll be all right. You know what I've just explained, all that there. That's all subjective. Where your profit is, how much you want to make each day, it's up to you. But knowing how to do it and keeping your sanity whilst doing it, that's key. So you don't lose your hair and go grey and throw your computer out the window out of frustration. That's the part you need to get your head round. The rest of it you'll trust the process with the rest of it. All right, let's catch you guys all tomorrow. Let's keep this one short so we can upload it and people will feel more inclined to watch 40 minutes as opposed to 4 hours. For those that want to learn to trade, for those that can't be asked, they're not going to do anything with their lives here, it's wasting time, kidding themselves. You've got to put in the work. Doing the work is the shortcut. Simple as. Take care, everyone.